Hello and welcome to our special edition of Market Masters. The big talking point is this: will US President Donald Trump's 50% tariff on Indian imports trigger a deeper market correction? Does India's long-term story stay intact despite the hit to exports? To make sense of what this means for investors, I'm joined by a market veteran and one of Dalal Street's most respected voices. Ramesh Damani is with me on the program now. Mr. Damani, great to have you with us here as always. It's a pleasure, sir. So let's just get the ball rolling with just your initial thoughts on how you think about these tariffs. And I must say, you were absolutely bang on when President Trump was elected. You were one of the few voices on Dalal Street who was very circumspect in terms of how this is likely to play out for a country like India. So in that sense, you've got it absolutely right. We're dealing with 50%, which has gone into effect in terms of tariffs. Opening thoughts, Mr. Damani.
Yeah, Prashant, thank you. I think what I had said at that time was that the world is changing on its axis, and that's precisely what has happened. But Trump talks about making America great again. And let me give you some examples in history that actually made America great. In the 1940s, when America had beaten Germany and Japan in World War II, what they did was they announced a Marshall Plan to rebuild Germany and Japan of $100 billion. And that's what made America great again, not what imposing tariffs is. Closer to home, Prashant, in 1960s, when India was suffering a famine and was the leader of the so-called non-aligned movement, Indonesia, Egypt, and India were the leaders of the non-aligned movement out there. But India was suffering from a famine. So Kennedy and Johnson administration sent PL 480, Public Law 480, food and grains to India to avert the storage. That's what made America great again. Even later, in the 70s, when America was stuck in a quagmire with Vietnam a few years ago, what they did was, just a few years after the war ended, you could go to the Vietnamese War Memorial, which was basically bashing America, and buy a Coke by paying US dollars. That's what made America great again. So America has this outward, sunny disposition of taking the world along with it. What I'm afraid the president is doing a self-goal that will in the long term hurt America's interests, because it's the old fable in Aesop that you want to kill the goose that lays the golden egg. And I think they're forming some part of strategy of that, not understanding that when the world prospers, America prospers. So I'm somewhat disappointed in the direction and tone of US policy.
You were apprehensive and now you're disappointed. What next, though, is the question. You said, the world kind of the expectation was that it's being turned on its axis. Will it remain turned, Mr. Damani? I mean, is this kind of the new normal, or, it'll snap back in some ways? I'm not talking about a specific thing here, but is this kind of fissure, break permanent in your opinion?
See, I'm not a geopolitics expert, Prashant, but I'll tell you one thing, having played in a schoolyard, that if a bully comes at you, you have to stand up to the bully. Because it's not that he wants a better deal from you or he wants one particular thing. He wants to dominate you. And I don't think we fought for independence to be dominated by an economic power as important and as preeminent as America is. So I think there will be no deal that satisfy him. You look, he renegotiated NAFTA with Canada and Mexico. Then he made a deal with them, and now he's gone back on the deal. So no deal will really satisfy him. He wants dominance. He wants to prove that he is, the most important global historical figure, worthy of the Nobel Prize, worthy of the Nobel Prize in economics also perhaps. And I don't think any deal would satisfy him. I think over time, we will have to forge new relationships. And while I hope the 50% tariff will not last, I think at least for the next 3 to 4 years, America is proving itself to be a fairly unreliable partner, not only internationally, but also in what it's doing to its domestic institutions, whether it's the Federal Reserve or whether it's the Ministry of Health. I think it's proved to be a very unreliable partner. And I think that while India will pay a price for it, but as I go across this country, the last 6 months, I visited various companies across this country, And I come back always sunny and optimistic about the prospects, about the entrepreneurial vision of these businesses. And I'm investing myself in a wide range of businesses, even at the current time. So while there will be some pain for the textile people, for the jewelry people, for the shrimp exporters, and the like, I think it's bearable pain. I think what the government is doing is the right thing. For example, by recalibrating GST, by trying to subsidize a little bit of exports that India is doing. And I think not only will we survive, but God willing, we will thrive.
I think that's absolutely well put. Got to stand up to a bully because he doesn't want this or that. He just basically wants domination. Mr. Damani, for now, right, this, I know it's up in the air, we don't know, and there have been so many instances where actions have been ad hoc. Something has been announced. I'm talking about US and other countries over the last couple of months. Something's been announced, it's been deferred, it's been pushed back. Something has been said, something else has happened. So we don't know. I mean, it's possible that this additional 25% goes off tomorrow. But what is your own sense? You're a keen follower of global news flow, and you read a lot. What is your own sense, Mr. Damani? Because the longer this 50% stays, I mean, the larger the hit. I was talking to Sajid Chinoy of JP Morgan, who was making that exact same point. Sir.
I mean, I can't really speculate as to how long it will stay. But my sense is that it's very slowly getting baked into the economic forecasts of India and America. You know, America doesn't, at this point, really need Indian exports as much as it needs India's services. And I think that is a point that we should, look at least. We obviously have a lot of service exports to America, but America has a lot of service exports to India too, in terms of usage of Google, WhatsApp, Facebook, and the like. And, like China, for example, has followed a policy of domestic first. I mean, it's something that I'm sure they're considering, the Mandarins in Delhi are considering that, if you will. I think the only way they said they can get from 50 to 25% is not by buying Russian oil. I'm not sure you want to give up Russia, because at the end of the day, during the 71 crisis, during the recent crisis, they stood by India as a decent friend. So I think we can. I don't know. The geopolitics is a different ball of game. I'm not really conversant with that. But I'm not sure we should abandon Russia altogether. And it's very hard for me to say it because I'm unabashed American admirer. I truly believe America is one of the great countries of moral force of the world. But if Trump is so determined to unmantle 50, 75 years of development of the world, I think we have to look at other options. And I think the world will come up with other options. I'm very confident the next year or two, there will be other options in the world. And America will see its own preeminence decline over a period of time.
Absolutely. I mean, 50%, of course, can't be a permanent rate in that sense. But whether this will be brought lower through negotiation, what's the off-ramp, or organically, right? At some point next year, US consumers will start to hurt as prices go up. And that'll, the midterms.
Yeah,
sorry, go on.
Yeah, I think you're right, Prashant. What the off-ramp is basically that when inflation strikes up in America, or when the economy does badly ahead of the midterm elections, or, we've been through this as a country. We know in the 70s and 80s, Indians were used to high tariffs and shoddy goods and a low standard of living. I mean, that's the same thing that's going to happen to America. America is such an innovative and competitive economy. Just to give you perspective, Prashant, when I was there as a student in the 80s, it was one of the biggest market for consumer electronics. And yet, even as early as the 1980s, it had no consumer brand that was American. All the electronics, the television sets, the radios, the tape recorders, the VCRs, were all Japanese or Korean or Singapore brands. They didn't have a domestic brand left of consumer electronics, because it was an economy that thrived on innovation and moving ahead. So just right now, as it's powering ahead with AI and with data centers and with so many other things, and leaving the other fields behind, I don't think Trump understands that. I think the feeling that he's going to bring back manufacturing to America, in my opinion, is a pipe dream. It's not going to happen. It's just so clear it's not going to happen. And as that reality sinks in after 6 months or 1 year, as the midterm elections rolls around the corner and the president is answerable to voters, I think that will be the off-ramp where he will change it. Right now, he's almost walking on water. Whatever he says is happening. Everyone is falling in line with him, whether it's the Fed Reserve, whether it's the Health Department. I have to believe that at some point, the road will hit the rubber and he will have to recalibrate the policy, because I absolutely refuse to believe that tariffs, inflation, low standards of living, shoddy living are something that Americans will accept willingly.
Absolutely. Mr. Damani, we'll get to markets in just a bit and what they're pricing in and whether more needs to be priced in. You said economic models and forecasts are slowly baking this in. But just one point. I mean, this is also such a critical moment in this new, the apex technology of our times is artificial intelligence, right? And US is clearly leading, and China is close on the heels. And some believe that this is, every technology cycle, of course, in the beginning seems like it's going to completely demolish the older order, but some truly believe this one in a way will, because it's so transformative. So, given, the 50% tariff is one thing, but it also kind of, this, tiff with the US in that sense also hurts us in these ways, right? Technology transfer, integration into that tech value chain, et cetera, et cetera. Are you worried about that, Mr. Damani, at all, if this goes on for a bit longer?
I tell you, the thing that I don't worry about is that we have 1.4 billion consumers, and as much as America may sneer at it, they need those consumers. I think Facebook, WhatsApp, Google, search would be much poorer offerings without the ability to tap into that 1.4 billion Indian consumers. So I think a lot of the language learning models are based on Indian databases. A lot of user cases for AI comes from India. So, I'm not really scared that they would, stop the technology transfer to India. I mean, that would be another example of self-goal that they would be doing. And if not, there'll be plenty of European companies willing to do it, or American companies setting up shop in India to do it. I think at some point there will be a reckoning, high noon for Trump's economic policies. It has perhaps been delayed. I thought it would be earlier than it's been now. I think 6 months into this draconian, I think he would have started feeling the effects. Clearly he is not, because the Dow is making a new high altogether, and the American markets are showing a lot of confidence. But somehow I feel that confidence is a bit misplaced, and maybe this will not be a drip, drip, drip type of bear market, but one fall day, it will be a straw that broke the camel's back. Something will happen that will trigger a fall in the market, and then the reality of how to deal with it will strike them. But I think what is going for India, Prashant, right now, is that we are 1.4 billion consumers strong, a very strongly domestic-focused economy. While there will be damage on the periphery, you cannot ignore that. There will be some damage on the periphery. I think India is well positioned to recover from that, because basically only about 1-2% of our GDP is consisting of US exports. So while it's important, I don't want to undermine the importance of that. I think it's overcomable problem.
You mentioned markets briefly, Mr. Damani. That's exactly what we're going to focus on. But I have to take a quick commercial break. Stay with us. We're right back with Ramesh Damani on markets and what are they pricing in. Stay tuned. Welcome back. We're in conversation with market veteran Ramesh Damani, who's with us. We've been talking, of course, about the India-US tariff tiff, 50%, what happens to it. And Mr. Damani, of course, you clearly believe that, businesses here remain vibrant and we've got a large consuming class, which, as I put it, I think last week before last, is our rare earth, if I can use that terminology. I mean, that leverage or whatever you want to call it. Mr. Damani, let's talk about markets. Are markets adequately pricing all of this in right now? I'm talking about the markets here in India, although you alluded to US markets and what they may do. But here in India, what is your sense? Is all of this getting priced in?
I think, on the D date, the markets were surprised that there was not a rollback. I think the market expectation was that it would be rolled back. It didn't happen, so the market has taken it on the chin for the next few days after that. So I think even as we speak to you, it is kind of pricing that in there. But, the impact is not on the domestic phase economy, the construction company, the telecom companies, the hotel companies. I mean, I don't see why they would go down per se, because that is like throwing the baby out with the bathwater. There are certain export-oriented sectors which are a bit labor-intensive, but not very, very important to the Indian economy. Jewelry, shrimp exports, textiles, which will probably experience a slowdown. But the rest of the economy remains fairly well sheltered from that because we are a domestic economy, like I've often said, and there's a lot of domestic-facing industry that will continue to do well. Thank you.
Yeah. Uh, okay, fair enough. Markets have been, investors broadly for the last 1 year, Mr. Daman, you would agree. Of course, there are always cases, one-offs and some stocks which do well in any kind of market. But for the first time in the last few years, things have been flattish, Mr. Damani, right? What is your own expectation? I'm not asking for a near-term forecast, but what is your sense? A bunch of people we've spoken to recently have said, and foreigners have been big sellers, although local investors have been even big buyers, but foreign buying does matter. I think as this episode and past episodes also show, for markets to do well, what is your sense, Mr. Damani? Next 2 quarters, 3 quarters, will we make a bit of a bottom? As far as earnings go, will earnings start to perform better on an overall basis? And consequently, what does markets do?
Yeah, it's a question that, of course, perplexes me every day, Prashant. But we've had almost a stellar run since the COVID lows. We've gone up 3-4x on the index level. Individual stocks have obviously done far better out there. So if it remains range bound or sideways for the next years, 18 months, I'm okay with that. I mean, there's no indication yet to suggest that the bull market that began in COVID is over, that it will continue. And markets go through long periods of consolidation before they move up. Having said that, I mean, when I go and visit companies or I go and visit entrepreneurs, I go and visit speakers, understand what they're saying at conferences, I see no reason to be bearish. I see attractive opportunities to invest at valuations I understand and in businesses I believe in over the next few years, and that is both in the listed space and in the private equity space. So, from my end, I remain sanguine. I think it's a good time to invest in great businesses. And that's always been the mantra. Rather than invest in any old thing, is find a good business and remain invested in that business. I think the market consolidates for the next, say, 6 months, 12 months. It's fine by me. I mean, markets are not of the creature that should go up year on year, year on year. It happens in the first years of a bull market, then consolidate, and then picks up steam again. So I think we may be at best in a good consolidation phase. I certainly don't think we're in a bearish phase of the market. And I would expect that in some due course, the market will pick up and, challenge the old highs.
Mr. Damani, have you, dramatically shifted your focus to the private equity space, unlisted space in that sense? Many investors in your peer set that we speak to seem to suggest that. You're smiling, but is that correct? And do you think that's a function of valuations? I mean, you want to kind of go back and back to find, better starting points in terms of PE multiples. Go on, sir.
I don't know, Prashant. It's one of those things. Yes, I have done it. I moved a bit more money into private equity. Some of it has worked out pretty well for me.
Yeah.
So I think that kind of reinforces that. So you tend to do more of that if it happened. But I would say as an overall, say if you ask me my percentage, I don't think more than 10% of my portfolio is in private equity right now. But, yes, I have. It used to be like 98% listed equities, 2% private equity. So it's up to 10%. So it is, getting, to be serious amount. But I think some of the early decisions have proved to be correct or they made me money. So you tend to, do a bit more of what's making you money. And some of the valuations are, a bit stretched in the secondary market, which is fine. But I'm categorically telling you, thumping the table, I find as I visit companies, a lot of opportunities in the secondary markets too. So, I'm happy doing a mix of both.
That's interesting. Mr. Damani, you were bullish on the defense space in a big way. Lots of companies you own. Could you give us a relative sense of your exposure there compared to the peak?
I mean, they have been significantly reduced, but, I just got prices that, I believe were, forecasting, 2-3 years of growth. So I was happy to get rid of some of them. But some of them I've still kept. I mean, so it's not that I've exited all the defense. In fact, I haven't exited any of the defense names broadly. I've kept them. Some of them I've, lightened my position, just took some money off the table, if you will. But I think if you look at some of the public sector stocks in, say, the construction space, or you look at in the rare earth space, I think there are plenty of opportunities even in that sector in those businesses. So we have moved some money from, say, defense into, say, construction, rare earths, that kind of space, yes.
E-governance solutions, right? I mean, I think has been something that you backed, and you've done that in a way in different ways, right? I mean, on the private side as well. Still remain bullish, Mr. Damani?
To be honest, and I'd use this public medium first to explain this point to you, is that I'm not on any public medium other than coming on television. So people ascribe a lot of shares to me, which I may or may not own. But having said that, so please don't follow social media. I mean, if I speak on TV, I am not on any other social media. But I have been bullish on this digital public infrastructure. The stock hasn't worked out. It had a pretty sharp fall. But it seems to have found its legs. Some new orders are coming in. The market seems to have bottomed out. So, I remain bullish on that. But I think I clearly probably overpaid for it. I think that was the risk in the stock. But, the opportunity still looks pretty promising. I wish I had done it at a low rate. But, that's the nature of the market.
Specialty chemicals, another area you like, Mr. Damani?
I have bet a few shares. I have a friend who knows that area particularly well. So he's kind of guided me into that area. Having said that, Prashant, I think the more important point I'm trying to make is that I'm not fully invested in the market, but I'm well on my way to being fully invested in the market. But as always, I'm over 85-90% invested in Indian markets. And I continue to look and hunt for opportunities to find good businesses. I'm not getting rattled by the tariffs or by other things. I think the expansion will continue to take place in India. There's continued opportunities to make money in India. And we are happy if, markets consolidate 2 years. I mean, I'm not certainly of the camp that says that if the market doesn't go up 20% this year, it's been a disaster. I mean, that's just not been my experience.
Well, that's very well put. And I think that nicely brings us to a close in this conversation, Mr. Damani. Thank you so much for your time, sir. And it's reassuring. And of course, lots of insights in that conversation as well. We started, of course, with a bigger picture, 30,000 feet. I mean, US and its relations with the world, India, and of course, a bit about the markets towards the end as well. Really appreciate your time here on this episode of Market Masters.
Thank you, Prashant.
Well, that's it from me. Stay tuned. More coming up after a quick commercial break.